Well, good afternoon, everyone, and welcome to our session on shaping the post-pandemic recovery in Africa. My name is Christopher Adam. I'm a long-time research associate at the CSAE here in Oxford. The aim of this session is to discuss some of the aspects of the current pandemic and the policy responses to the pandemic. Both present and, importantly, looking forward into the future. There's an awful lot has been written on, spoken about on the COVID-19 pandemic and the policy responses to it. And indeed, many of the papers that are presented in the CSAE conference this year pick up on aspects of the crisis. But we thought it might be useful to bring some of these thoughts together in a slightly more focused conversation. Focused in the sense that whilst there's an enormous amount of discussion around the economics of the pandemic at a global level, I wanted to focus our conversation in much more on the African continent and policies and choices in countries in sub-Saharan Africa. Secondly, I want to focus on some of the more macroeconomic dimensions of the response to the crisis. And thirdly, I think it's useful to look beyond the current phase to think about some of the implications that policy responses, both domestically and internationally to the crisis, have for the nature of the post-pandemic growth and recovery process in sub-Saharan Africa. So we've organized this session as a conversation with two colleagues who I shall introduce shortly. I hope to use the session about the first 30 to 40 minutes in terms of conversation with our panelists, and then open it up to a Q&A. But before I make introductions, let me just make two initial remarks. The first is, as some of you might have seen on our website if you visited the website in the last 30 minutes or so, we've just uploaded a tribute to Professor Benno Ndulu, who, as you may know, passed away about a month ago. Benno was not just an outstanding researcher and preeminent policymaker in Africa, he was also a very good and very close friend of many people, including many on the call here today. If you have a chance later in the day, please do visit the website and have a look at the tribute. It is, I think, not just a very kind and generous tribute, but it's also very informative and sets a lot of Benno's work into context. The second is just housekeeping. This is a conversation with Q&A, and you will see a Q&A button at the bottom of your screen. If you wish to ask a question, and we absolutely encourage as many questions as you wish, please do it through the Q&A box. We will be curating the discussion, and we will call on you to make your question after the initial discussion with our speakers. And at that point, your mic will be opened and you can present your question then. So I have two panelists, both good friends of the CSAE. The first is Catherine Pattillo, and Catherine is the Deputy Director of the Africa Department at the International Monetary Fund. She's had a long and very impressive career at the IMF, but we're glad to say that it was preceded by a spell here as a postdoc researcher at the CSAE. But at the fund, she's worked in the research department across a wide range of policy issues, and immediately preceding her current position as Deputy Director of the Africa Department, she was, I think, Assistant Director is the term in the Fiscal Affairs Department of the Fund. But as Deputy Director of the Africa Department, she's very much in the front line of the Fund's engagement with countries on the continent, and obviously at the moment thinking very hard about issues to do with both short-term responses to the pandemic and thinking about framing responses in the medium term. So welcome, Kathy. Our second speaker is Lewis Kasekende, and again, an old friend of the CSAE. Lewis Kasekende has spent a long time at the Bank of Uganda, but interspersed with a spell as chief economist of the African Development Bank, as an executive director at the World Bank in Washington, and indeed until very recently the chair of the board of the African Economic Research Consortium based in Nairobi. And he's just off to continue in the capacity building world by taking up the position as executive director at an institution called MEFMI, the Macroeconomic and Financial Management Institute of Southern Africa. So welcome, Lewis. It's great to have both of you here. So let's get started. Over the last year, as this crisis has unfolded, we've heard many people talk about the threat that the crisis has posed to sub-Saharan Africa and the risk that it's going to kind of undo 2 decades, a quarter of a century of significant progress and development, both in macroeconomics, but more importantly, across the whole breadth of human development on the continent. In part of that discussion, there's been much reference made to questions of resilience. To what extent have the economies of sub-Saharan Africa shown resilience, been able to respond to the crisis in a way that reflects a return on the investments that were made in earlier years? So can I start with you, Kathy, and just get your impressions? This assessment of rolling, or this view of rolling back development 2 decades, is it accurate? Are you seeing something different on the ground?
Thank you, Chris. And so thank you so much for the invitation to this panel. It's a pleasure to be here with you and with Lewis. And I'm looking forward to the conversation. So the region has been severely hit by the health and the economic crisis, not just the health crisis, but then of course the containment measures, the capital inflow shock, the commodity price declines. So last year, Sub-Saharan Africa contracted by around 2.5%, and that is the worst GDP decline on record. This year, we're projecting growth at around 3.2%, so some recovery, but this is way below what we're projecting for the world as a whole, around 5.5%. So people in the region, businesses in the region have taken a very severe hit. And there has been, in this very short time, reversal of these very hard fought gains in development progress that were achieved over the past 3 decades. Since 1990 and before the pandemic, the region had seen declines in poverty rates, 15.5 percentage points, increases in life expectancy, from 50 to 60 or so, real significant improvements in net primary enrollment. But now we're seeing, significant disruptions to education, which is jeopardizing the prospects of a generation of school children going forward. In the region, students are missing significant days of instruction, maybe 4 times more than that in advanced economies. Some research was showing that the classes foregone are going to cost up to 500 billion in future earnings, or almost 7,000 per child, and that's a huge amount, obviously, in a region where per capita incomes are low. So those with the least have been suffering the most: the young, the low-skilled, women, informal workers. These groups are being hit hardest. Chronic hunger, may become much more prevalent, and the number of people in extreme poverty has been pushed up 30 million or so. So Right now we're seeing, repeated waves, probably third wave in some countries, and vaccines are reaching Africa only slower. So the prospects for recovery are diverging then from other regions, and there's also then some divergence within the region. But looking at the response, we need to recognize that African governments acted swiftly, and it could have been a lot worse. So governments acted quickly, and people then have been responding to the impacts of the pandemic. So why has there been a bigger growth hit than in some other regions? One main reason is that fiscal space to act in response to the crisis was much smaller. So on average, in advanced economies, they deployed, over 20% of GDP to protect their people and businesses. In emerging markets, 6%. But in low-income countries and in the region, it was more 2 or 3%, both for health and non-health. So much less resources to respond. But countries have again responded innovatively. In the face of declining revenue, they've used the space to increase spending on health. They've used innovative approaches then in the face of smaller social safety nets, with greater informality and then harder to provide social protection. But they've used innovative methods, particularly digital money methods, then to target and deliver cash transfers to the most vulnerable. Togo's Novisi program is a prominent example. In health, they've scaled up spending on health supplies, on additional healthcare workers, on public awareness programs. So the response then has been with the resources available has been innovative in the fiscal area. In terms of monetary policy, in last year, most countries appropriately reduced policy rates to support the recovery. They've also introduced facilities to inject liquidity then into the banking system to ensure that the banking system is able to support businesses. And they've encouraged banks to work with clients on loan moratoria and restructuring. In the exchange rate area, again, non-PEG countries have allowed significant exchange rate flexibility, which has helped with the shock. So, looking forward, and we'll talk more about forward, but I think the priorities again are going to be, number one, vaccines, getting vaccines distributed in the continent. Two, continuing to protect households and firms, particularly in countries which are seeing continued waves or impact of the pandemic. And third, looking forward, significant external financing coupled with transformative domestic reforms to promote recovery. Thank you.
Thank you very much, Kathy. A couple of points you raised at the end, which I would very much want to come back to on financing and on kind of structural change going forward. But before we get to that, Lewis, can you, from your position, in particular looking at the countries of East Africa and the East African community, does this, how Kathy's described the situation on the ground, does that resonate with your observations? And in particular, I'd like you to come back to this point about resilience. To what extent the kind of progress particularly on the macro and fiscal fronts over the last 15, 20 years has allowed for effective response given the nature of this shock. And you're on mute.
Yeah, thanks a lot, Chris, and thank you, Kathy, for the description you have just offered. I share a number of share the same views in terms of the impact on Africa, on East Africa. Now I want to focus on East Africa. East Africa has suffered a number of disruptions that have gone through the external sector and the domestic channels. We have seen contraction in exports. I'll just share some numbers with you. Kenya suffered a reduction in exports of almost 7.6%. If you look at 2020, Uganda also suffered a contraction in exports. But on the other hand, also, we've seen contractions and big contractions in imports in this region. Kenya, for example, contractions of almost 25% in imports, 11.3 for Uganda, and 22.8 for Tanzania. And when you look at the growth rates for the 6 countries in this region, you see slower growth rates. A contraction in Uganda for 2020, a contraction in Burundi for 2020, and slower numbers for Kenya, Rwanda, and Tanzania. On the point raised by Kathy of poverty, there are quite a number of people who are falling into poverty, especially those who are in the SME segment of the economy. So the point that you are raising of resilience doesn't hold in the case of East Africa. We have seen that most of the gains that we had achieved in the first 10 years of the 21st century, they are being washed away. Now, in terms of the response, I think Kathy has shared with us what has happened across Africa, and we've seen something similar in the case of East Africa. The countries have opted for expansionary policies, especially expansionary monetary policies and expansionary fiscal policies. But what I want to underscore is that the fiscal space that these countries have or had just before the COVID was much smaller. So the response on the fiscal side has been muted. The debt ratios in a number of these countries of the region had gone up mainly because of the way these countries responded to the financial crisis. You now have countries with debt ratios either at about 50% of GDP or 60% of GDP. And if you compare debt service to revenue, these numbers are very high. These countries have run out of fiscal space. And I also want to add my voice to the point raised by Kase, that these countries, yes, will require external support, but it should not be non-concessional lending to these countries because the fiscal space is very limited. So any support, external support extended to these countries should be on highly concessional terms or grant financing. So that's what I can add on that. I think, Adam, you are muted. I can't hear anything.
Yes, we're all guilty of this problem. We'll turn to this in just one second. I wanted to pick up on one small point that both of you have sort of alluded to, and that's measuring the scale of the hit in terms of GDP growth. And given that countries are starting on average with quite a large current account deficit position, the squeeze on consumption, or the squeeze on aggregate expenditure, has been larger than the squeeze on GDP because of this external demand shock. What do we know about the composition of private spending? Are we seeing a real cutback on private investment as people are trying to protect consumption expenditure? What are the implications for that going forward? Is this to what extent are people balancing the protection of current consumption against future consumption through investment? I don't know whether the fund are looking at sort of consumption numbers as well as GDP numbers.
Yes, so consumption, all components then of GDP have taken this hit, but particularly as has been discussed then in the external sector. And you're seeing declines in public investment then as countries have had to reprioritize expenditure, and that then you can imagine then is negative for private investment then during this past year. So consumption is also affected by things like remittances, which we have seen a varied picture across the region. In some countries then, remittances have taken a big hit, like in Nigeria, which accounts for a significant amount of the remittances in the region. But in other countries, they like Kenya, I think they've held up. So the picture is quite varied.
Okay, thank you. Before we go to the financing, I wonder, can we take a question from the audience? So Fiona, could you invite Adrienne to present her question, please?
Thanks for taking my question. Yeah, so Catherine, you mentioned earlier that in low-income countries, they tended to react to the threat of the pandemic quite quickly, and in many cases initiated lockdowns really early, most of the time when case numbers were comparatively very small or even almost non-existent in comparison to high-income countries and when they introduced lockdowns. And I wondered whether there's any consensus on whether those lockdowns were sort of very effective in containing cases and therefore sort of worth it and a good policy measure, or B, very economically costly and sort of not necessary to contain a pandemic, in that we don't really see the same level of spread and deaths as in high-income countries.
Thanks. So think about the challenge for a policymaker in the region with the pandemic hitting and the need for quick decisions at a time of such uncertainty globally. So the actions taken to quickly institute, lockdowns, to sometimes close borders, I think required, tremendous courage and trying to be out in front at a time where globally there was a lot of uncertainty about whether in countries like the sub-Saharan Africa with lower healthcare capacity, with large, informal sectors, with people in, urban environments, in very close quarters, and less ability for social distancing, whether then there was going to be a massive hit from the pandemic getting out of control, which would have overwhelmed then limited healthcare systems. So, advanced economies themselves were grappling with how to most effectively institute, lockdown. And with hindsight now, we've learned the importance of the entire package of, public health measures, of social distancing, of testing and tracing, of more selected kinds of containment measures. But I think early on in the pandemic in the region, it was not clear there, as it was not in lots of other countries. So policymakers were feeling their way. There'll be lots of assessments on, whether the sort of cost benefit and whether things could have been done better. But preventing then the objective to prevent the pandemic from spreading rapidly in countries, again, with limited healthcare capacity, was the objective at the outset, and doing that at a time while still, to the best of countries' abilities, helping protect those who are negatively affected by those measures.
Thank you. I'd like to turn back to the issue on financing, and I want to start with you, Lewis, if I may, but do feel free if you wanted to add anything on that last question about lockdown, because I know that Uganda is a place where the initial lockdown was really pretty aggressive, but relaxed, I don't know what, 4 or 5, 6 months ago. But maybe you have some reflection on this issue about I
have some questions for all of you, following up on your discussion.
Associated with aggressive domestic
so the first question is
policies. But really, I want to go on to my next theme. You concluded your last comment by saying there isn't the fiscal space in many countries to support significant non-concessional borrowing. And therefore, external finance has got to be highly concessional or ideally grant, so full grant financing. Where's that going to come from? We're not living in an era of enormous global generosity on concessional financing. Where do you see those financial flows coming from? So that's a double question to you.
Yeah, let me first go back to the issue raised in the previous question on the costs of lockdown. Dealing with a shock to, it was a health
Lewis is joining us from Khartoum at the moment, and it feels as if the connection is not great just yet.
The decisions taken by government were advised, guided by medical teams. The economists, financial analysts only came in at a later stage. We are now more informed, we have more information, and we can do those assessments. But going back to March of 2020, it was a health crisis that we were dealing with, and to contain spread of this COVID, you had to do the lockdowns. So that's number one. On your point of sources, definitely we'll have to rely a lot on multilateral institutions. The World Bank would be one of those institutions many of us will be looking to, the African Development Bank. So these are the institutions that we have to look to, in addition to the bilaterals. That's what I can say. And I know you are right that we are not dealing with a situation of plenty, but the other option of these countries going back to where they were in 2008 and going for sovereign issues into the markets to source financing, to me, I think is not advisable. They don't have that space to go back to the markets and do sovereign issues. I can't see that space going to countries to borrow for infrastructure at commercial rates, because we are in a situation where some countries are already defaulting on some of the sovereign issues made around 2010, between 2010 and 2020. So that's the position I have.
Kathy, the fund has done a lot of short-term lending in 2020 and moved really pretty quickly. Do you share Lewis's view that we've got to be focusing primarily on concessional funding from the multilaterals at the moment?
Thanks. Yes. So to add on the IMF, so I'm really proud actually of what we've done in the past year. So the fund has lent 17.5 billion in 2020. So this is 13 times the normal annual average. And we've also temporarily increased the access limits, which are define how much financing a country can obtain from the fund, and allowed for more frequent disbursements under these emergency facilities. We've also provided debt relief, to the weakest members, so that they have more money for paying doctors, nurses, people. So there were two tranches. The first two tranches of this debt relief provided, over 400 million to 22 countries in the region. And I should also mention, the G20 debt service suspension initiative, which has provided, 5.5 million to sub-Saharan African countries. And this is going to be, extended now through June, and we would welcome another extension. So everyone needs to do more. Lewis mentioned the African Development Bank, the World Bank, the bilaterals, and the IMF. I think all of these institutions and countries need to do more. So for the fund, what are we doing? We're looking at how to build more concessional lending capacity for low-income countries. That is key. How we can continue to support this recovery with more concessional lending. That's first. We're also looking at getting unity in the membership for a proposal for a new allocation of special drawing rights. So this would allow reserves to go up, wouldn't increase debt, and provide more strength for the recovery. So again, all countries are going to need this significant finance, and the sources are going to need to be highly concessional. There's going to need to be more private finance. I would not agree with Lewis that for the frontier markets, sovereign bond issuance is going to be completely closed off and not something that they should continue to look for. We did have a closure at the crisis, no African countries issuing until more recently Cote d'Ivoire and Benin. But countries, were able to increase access in pre-crisis, and as conditions in the world economy improve and in their own economies, and as spreads, which spiked again initially at the crisis for sub-Saharan Africa frontier markets, but then have subsequently closed. The good use then of this type of financing with proper debt management, public investment management, and macro management at reasonable costs would need to be on the table, I think, for some countries.
Can I, thank you, both of you. Can I follow up a kind of related issue that if you think of the last decade, 20 years or whatever, one of the big themes of kind of unfinished business and public finance priorities in many countries in sub-Saharan Africa was driving domestic resource mobilization, improving the capacity to mobilize finance. Now, are we living through a time where the best we can hope for is sort of stabilizing and avoiding domestic resource mobilization from declining, or is it reasonable to think about there being opportunities thrown up by the kind of disruptive nature of this crisis that can start or help countries progress on a path of more effective domestic resource mobilization? Lewis, are you able to take that? I'm not sure if you're... I'll start with you if you can unmute yourself, and then I'll turn to Kathy.
Yes. Thank you. No, I think we should not step away from doing more on domestic resource mobilization. I know we've achieved something, but we are not where we want to be. We still need to deepen our financial markets in Africa so that the financial sector in totality can support growth and development in Africa. I mean, when you look across Africa, in most of these countries, you find that medium long-term resources are very, very limited. And I think we can do more. We've seen what has happened in Kenya. They have unlocked their financial system. They have been able to issue longer-term dated instruments, and I think that's a very good example. And we should see more countries deepening and restructuring their financial systems so that they can support growth and development. So that's number one. Apart from the financial system, a number of these countries also have very limited revenue effort. You find countries with 14% of GDP, 16% of GDP. We can do more in mobilizing revenue, get to 21, 22% so that we can better support growth and development.
Kathy.
Yes, so I mentioned the need for the combination of transformative reforms and external finance. So domestic revenue mobilization is really one of those needed transformational steps. And, as Lewis was saying, the ratios are very low, on average 12.5 in the region compared with 18 for other emerging markets. And hopefully the crisis, has provided this disruption and, the opportunity. So people always like to say, a crisis is, don't waste the opportunity of a crisis. For people to think about the social contract, to think about the fairness of the tax system, to think that you're building back and everybody has to contribute to that, to try to dislodge some of the kind of, sacred cows of private sector pushing back against tax measures. And there's real potential also from digitalization, and that's what the crisis has really brought to such high attention of everyone, that using digital methods then to increase compliance, to use e-filing. I think that's happening in Kenya, e-invoicing in Sao Tome and Principe. The potential of digital methods then to increase compliance and enhance revenue collection, and to mitigate sort of corruption risks is huge. And countries are really doing a lot in that area. So I think there's just a lot of scope in the area of obviously the VAT, and broadening that base, improving the efficiency of the VAT. So it doesn't, you don't have to raise rates, but just then eliminate some of those, exemptions and zero rates that are thought sometimes to be progressive, but often not. And that would give you a significant increase. And then again, reducing tax on the corporate side, exemptions, and other loopholes, which would contribute to fairness. Big companies need to pay external companies through transfer pricing, et cetera, need to pay their fair share. There's a larger role for excise taxes, for environmental taxes, for making sure the mining sectors contribute their fair share. So those reforms are really needed to build the resources then for development spending, to ensure that, as Lewis was saying, these very, very high interest to tax ratios, which mean that, a large share of because tax is so small, and then a large share of your revenue goes to interest payments. So building that to allow spending on investment in people and public capital.
Thank you. I think this whole line of argument about the transformative nature of sort of e-governance, broadly speaking, I think is really important. And it also, on both sides of the ledger, you talked a lot about the efficiency of provision of service, but it also changes the nature of the political bargain. There's more transparency in people's sense of engagement with the state, which hopefully is an important point of leverage when it comes to moving that social contract forward towards a higher sustainable but still low distortion revenue mobilization scheme. I've got a few questions coming up. One of them, Anke Hoffler has asked a couple of questions, and I want to bring her in now. But Anke, before I do so, your third question is picking up on the next theme that I want to discuss with Lewis and Kathy, just looking a little bit further forward. So do you want to focus first on your earlier question about debt and financing, and then I'll ask Priscilla to come in afterwards with a question on debt and debt sustainability. So Anke first, if you don't mind.
Thank you very much, Chris, and for the opportunity to join this exciting conversation. So I think what do we mean by post-pandemic? This might actually last longer for African countries because vaccination is going really slowly in continental Europe, in EU Europe, and I think it's going even more slowly in African countries, sadly. So the restrictions are placing a big burden on all of us. So is it right to continue with these? This was one of my questions. And the other one is, if the US recovery is as strong as it looks, interest rates will rise. And what might that mean for borrowing in sub-Saharan Africa? Thank you.
Kathy, Lewis, whoever wants to pick that, either of those 2 points up. You're mute, Lewis.
Now, on what do we mean by post-pandemic? I think we need to build in some assumptions on this. I think where I am and where I sit, one has to take a view that, or we have a prayer that this would be short-lived. I think with all the vaccination that is going on in the developed countries, that this will again at least lead to easing of the restrictions, especially travel. If travel was eased, for example, as an example, tourism will again pick up. If we can have vaccinations not only limited to the developed countries, but also in sub-Saharan Africa, we will definitely see tourism again picking up, travel, be it inward within the countries or outside, pick up. So those are the assumptions that if it is short-lived, global demand will pick up. The points that we discussed earlier in terms of contraction of exports, I think we will see some reversal. So I think that's what we refer to. I mean, that's what I would refer to in terms of a post-pandemic. So it is, we have to rely a lot on the vaccinations. Thank you.
Thank you. Kathy, do you want to add anything to that, or maybe pick up on Anka's other question about risks on debt sustainability if the US recovery starts to drive up global interest rates significantly?
Yeah, so on the first, again, vaccines are key. And so as you know, our managing director has said, you know, no country is safe from the pandemic until all countries are. If you have vaccination, then adequately funded, COVAX being funded, you know, a mechanism then for distributing excess vaccines from surplus to deficit countries, help with logistics financing in the region. Those are steps, I think, that are going to be really important to ensure that the region doesn't lag significantly on vaccination, which is needed for, again, the entire world to come out of the pandemic. On borrowing costs, so right now we're looking at, you know, continued low for long, and the I think that is going to be still the baseline expectation. You know, everybody is looking carefully at those signals from the U.S. But I think globally still we're going to continue to see, for lots of structural reasons, low, very low interest rates going forward. So for the region, again, it's going to be, you know, how to ensure that countries with strong fundamentals and continue improving those fundamentals, continue improving macro management, continue improving public investment management, so that they can take advantage and ensure that borrowing costs for those that are accessing external markets then are as favorable as possible.
Thank you. Yeah, I think I was looking at some numbers in the context of a seminar here in Oxford last week, looking at UK public debt and the still very significant oversubscription on government issues, recent government issues, and the implied long-run interest rates still 20, 30 years out, long-dated stuff is still pretty low, certainly by historical standards. There's definitely a little nudge up in the short run, but the long-run rates are still anchored pretty close to their recent levels. Priscilla, you had a question. Can we bring you in at this stage? Thank you.
I just wanted to ask Kathy about the debt service suspension initiative, in that it merely defers payments rather than writing off debt entirely. So how effective is this, considering that a lot of the poorest countries are at high risk of debt distress already, in debt distress? Isn't restructuring debt a better approach?
Thanks, Priscilla, for that question. So, as you point out, even before the pandemic, there were a range of countries in the region who were at either in debt distress or at high risk of debt distress, 40% or so, and the pandemic has only made that worse. So the DSSI is one tool that is available for a large number of low-income countries, but it is not enough. And that is why the G20 had put together something called the Common Framework, which is an agreement among G20 countries to cooperate on debt treatments for any of those countries that are eligible for the DSSI when they make a request. And that's really a big step forward because it includes countries like China, India, Saudi Arabia, the new creditors, who aren't members of the Paris Club. And it's going to allow a case-by-case approach to debt problems because the needed situations are a lot different. And so unlike the DSSI, then it's tailored to those country needs. And you can think about situations where a country might need, is having a significant persistent liquidity problem. So they might need then, a rescheduling without an NPV reduction. And this can be done within this common framework, as well as for countries with unsustainable debt that, need deep debt relief. And then that kind of debt restructuring can be done. Again, another advantage is, all G20 Paris Club creditors are participating, and there's comparable treatment for other creditors, official and private. So far there have been 3 formal requests from Chad, Ethiopia, and Zambia for consideration in the common framework. So yes, more is needed beyond the DSSI, and this common framework offers the opportunity for since debt situations are going to be very different across countries, for very concrete approaches differentiated to the situations of those countries with, concrete plans and concrete bringing together of those creditors.
Thank you. Let me turn a little bit away from sort of issues of stabilization and the short-term response to the crisis, and think more about the medium term. And I guess I'm interested in whether you think we're at a stage yet to say anything useful about the implications of the experience of the last year, or the likely experience of last year, this year, and probably next year, for the shape of longer term growth strategies, growth and development strategies across the region or across the continent. Are there elements that we think are likely to change permanently? Are there opportunities to put in place reforms to strategy, to the growth trajectory that are going to be beneficial? We talked a little bit about the structural response on revenue mobilization, but if we move away from that, do we see areas where the current crisis may lead to potentially improving changes in medium-term strategy, growth strategies? Can I start with you, Lewis? I think we may have lost Lewis for a moment. Kathy, can we start with you, and I'll bring Lewis in a moment when his connection improves, if that's okay. Sorry to put you on the spot like that.
Oh, yeah. So it relates to the resilience point that you were stressing before. I think, yeah, that the pandemic has really brought to the front of mind the importance of resilience. And we know that, more diversified economies are more resilient. And so I think there will be that view that, we've seen a shock that is a 1 in 100-year shock, but we know now that other shocks, relating to climate, et cetera, that we had maybe thought were not possible are, should be in the realm. So building resilience and diversifying is important. We've seen, before the crisis, that non-resource-based countries in the region were growing faster than some of the resource-based, the oil or non-oil resource economies. And so I think you are going to see then, interest in thinking again about diversification, which is a big, difficult challenge. It might mean also that given countries have, more limited resources, that when they think about diversification, they're going to need to be very structured and focused and thinking about reform priorities, again, that are going to help with this resilience to future shocks, and thinking about what sectors are going to create the best returns for growth and employment. And those are going to vary across countries, but thinking not of a, pick firm winners or that kind of approach, but thinking of a kind of focused sector strategy. And of course, the kinds of support like power and electricity that's necessary for those sectors. But it's going to be different across different countries, whether building value added in agriculture or taking advantage of new service opportunities, or, what is needed in manufacturing would be a priority. Think about the disruption to global value chains that we've seen in the pandemic. I think this would make policymakers look again at the promising prospects from the Africa continental free trade area, where there's a market of over 1 billion people and combined GDP of 2.5 trillion. So lots of opportunities there, obviously, for higher interregional trade, reducing tariff barriers, but more important than the tariff, or equally important, the logistics, infrastructure, and and customs and facilitation. Digitalization we also talked about before too, and I think that's also the other huge thing that's going to affect this kind of growth strategy thinking, how as the pandemic is having this differentiated impact on sectors, with IT sectors doing better, so there should be scope in the region too to think about reshaping business models, taking advantage of those opportunities for more competitiveness in sectors that are using IT, speeding up internet access. We had a study which showed that if you increase digital access by like 10%, you could get growth boosts of 4% or so in the region. So lots of scope, I think, for the private sector then in digital. And the region has been a global leader in mobile money, really sort of outstripping the growth, and in East Africa especially outstripping growth in other countries. So there's really a potential, I think, for more leapfrogging of technology, taking advantage of those opportunities in the strategy going forward. Thanks.
Thank you. So Lewis, I think we lost your connection a little while ago, and jumped to Kathy, but I wonder, can you pick up where you were? And one issue that Kathy raised, which I think I would very much welcome your thoughts on, is the role that deeper regional integration, say on the back of the comprehensive free trade arrangements, continental free trade arrangement, is there scope there to improving resilience, particularly in the context of potential fragilities in global value chains?
I think regional integration has always played the role of strengthening resilience of countries. If you go back to the time of the financial crisis, you can see that exports to the region helped many of the East African countries at the time. Mm-hmm. But this time round, the noises that we are hearing are slightly different from strengthening of regional integration. I think we are hearing a lot of self-sufficiency. We are hearing a lot of, or we are seeing countries increase non-tariff barriers, discussions on whether Uganda should export maize to Kenya. Should we export sugar to Kenya? In an East African community, I think that is something that's so unfortunate coming out of this crisis, that countries are more inward looking as opposed to strengthening the East African community. Mm-hmm. So that's number one. But can I also go back to the issue of structure change that we are seeing, whether there are things that are of a permanent nature? Yep. I think we had seen the services sector playing a bigger role in terms of sources of growth. With this crisis, we've seen that online banking, online shopping, online schooling are all things that are more popular, and I think we are likely to see these remain. They are unlikely to be reversed even after the end of COVID. I think that's one area that I see in terms of changes in the structure of the economy and the delivery mechanisms delivery mechanisms. Then the other area that I also wanted to touch on is in the payments arena, that we've seen a lot of moving away from cash to other payment modes. And I think mobile money is going to become stronger because it has been actively used during this period, and also other online methods of payments. Thank you.
Okay, thank you. No, I think this is really interesting. The one of the great challenges, though, is thinking about in a sense, the labor intensity of this transformation that you're talking about, and the continued challenge of employment generation. In our final 10 minutes or so, I'd like to stay looking at the sort of the medium term and focus on the kind of interplay between the recovery agenda and the broader agenda on around climate change and sort of a green growth recovery strategy. That a colleague of mine here in Oxford, Cameron Hepburn, wrote a paper recently with Nick Stern, based on trying to understand the extent to which programs of investment in green recovery are threatened by the necessity of a shorter term stabilization and recovery agenda. Do you think that is a risk in sub-Saharan Africa? Are the two objectives of rebuilding after the pandemic on the one hand versus investment in a climate resilient growth strategy, are they compatible, or are there obvious trade-offs there? And let me just add in one other issue, and that's on financing. Is there a way to unlock what in some sense is a large volume, potentially large volume of green financing that can be mobilized to help the recovery, as well as investment in more resilient, climate resilient infrastructure and growth? Shall I start with Kathy this time?
Sure. So yeah, this is a really, really important question. You know, for the region, you know, climate vulnerabilities are really huge. So more than any other region in the world, Africa is vulnerable to, you know, natural disasters, floods and droughts, but also the slower moving climate impacts that are going to be affecting agricultural productivity, food security, and, you know, have links with lots of other things like migration, like conflict risks over, you know, water resources. Think of the, you know, Lake Chad Basin, etc. So it's a really challenging issue for the region, so I think adaptation should be at a part of the recovery strategy. And you asked about trade-offs. Probably you can minimize this kind of thinking that there's a stark trade-off by focusing more on, you know, adaptation as development. You know, it's not something sort of separate that is over to the side and different, but it's a part of a development strategy that's building more resilience and, you know, adapting to climate change, and that then provides opportunities when you're doing that for creating jobs and, you know, reducing poverty. A point that, you know, our colleague Stefan Durkan has made a lot is, you know, the dull disaster kind of emphasis that financing, you know, just financing looking ex ante saves more than frequent disaster relief. And so overall, I think for the region, financing, adaptation will again be more cost effective than lots of frequent ex post disaster relief. We also had some work that looked at, infrastructure costs of climate resilient infrastructure. Sometimes these are, not hugely more costly than non-climate resilient. So you've got to have these this climate resilient infrastructure, thinking, irrigation for farmers, flood management systems, climate smart agriculture, renewable energy, and then you've also got to have coping mechanisms like social safety nets that are going to, buffer how people are affected by shocks. So on finance, as you mentioned, there is a lot of climate fund finance out there, and one of the challenges, I think, is helping countries navigate and access and understand the application criteria, the requirements, what's out there for different projects, what monitoring, et cetera, is going to be needed. And one thing countries need to do is have a broad strategy and an overall incorporation of these into their budgeting processes. I think that could help also in accessing to be able to demonstrate that a particular project then is part of a well thought through development and budget strategy for addressing climate adaptation. And then there's scope then in the kind of green bond markets for more involvement. But this is something that we in the fund are working quite a lot on. There's a big agenda on capacity development. There's a big agenda on in the public investment area, extending our public investment management assessments then to look at the climate component. Overall, public financial management to incorporate, green budgeting, how to put this into your overall budget framework, and to look then at the financial sector implications also. So I think a really, really important area. As you say, there's concerns about the trade-offs, but there's a lot of finance out there. There are people thinking about, kind of debt for climate exchanges, and it's something that countries really can't ignore and need to look for the opportunities then that this kind of adaptation and addressing the opportunities for low carbon and resilient transformation are going to offer.
Thank you. Really interesting stuff there. Lewis, do you want to add anything here? I've got a couple of questioners who are eager to say a few things, but do you want to add anything on this point?
A quick one. I think looking at the agenda that most of these countries have implemented over the last 10 years, they placed a lot of emphasis on infrastructure, placed a lot of emphasis on climate adaptation. And as of now, there is a trade-off. They need to save lives. They need to get access to vaccines. And I think these countries need to be assisted during this period to see that they can get access to either vaccines financed by somebody else, I think, so that they can continue placing emphasis on the agenda of infrastructure and climate adaptation. So the fiscal space is so limited that you are forced into a trade-off.
Yeah,
that's what I wanted to add.
Okay, can I think I've got 3 questions now, but let me start with Anka. You want to talk about rare earths, and then I'll take Louise and Donna after that.
Yes, thank you. So I thought it was very interesting to suggest that adaptation is equal to development. So I'll keep thinking about this. Okay, but if we are going to green the global economy, then we're going to have less oil, more batteries, and this is going to mean big changes for some countries. So, for example, South Sudan's only income really is oil. So, you know, these countries are going to be destabilized because they haven't got the typical income any longer. And then rare earths are being found in, you know, sufficient amounts to be mined profitably in places in sub-Saharan Africa. And that leads to local environmental pressures and also conflict. We know that these are very often used to finance local conflicts. So what is your take on this? How can we sort of future-proof these societies for these changes that the greening of the global economy is going to bring? Thank you.
Thank you, Anka. Who wants to be brave enough to take on this one? I'm looking at Kathy.
No, maybe Lewis should go given Uganda's forthcoming oil.
Okay, it's a sign of an excellent question that everyone's is challenged to answer it. Lewis.
Yeah, it is a very good question on assisting these countries to get the best out of the resources they have. Uganda is moving in that direction of becoming an oil exporter. We've been assisted, and we're also trying our own efforts to see that we make the best use. I think at the end of the day, these countries need very good contracts, so they need to be assisted so that they sign very good contracts. 2 is the whole issue of how they use the resources, not only for current expenditures, but also for future expenditures. How do you distribute these resources for the current generation and the future generations? So that's my take on the use of resource receipts.
I guess I would just add, I mean, planning and looking forward is really important. So this is going to be a long-term transition. There will be, you know, reduced demand then for oil and fossil fuels, but, you know, increased demand for other resources. Understanding what that could mean for revenues, understanding what could be happening as countries around the world increase carbon taxation, understanding how countries could adapt their revenue frameworks to get the best return and adapt as things change is important. To use those resources then while still available for you know, investing, so that you're building other assets. and looking for the opportunities then that are there. I mean, think about countries with big forest resources and the interest of the international community in, carbon sink of large forests. The opportunity then for, again, renewables, given the large, solar and wind potential in the region. So there will be challenges, but there will also be significant opportunities.
Thank you very much. We've got about 3 or 4 minutes left. The CSAE conference waits for no person. So I want to draw this to a close. I've got a couple more people wanting to ask questions. So can I ask Louise and Donna to pose their questions as briefly as they can, and hopefully let's do the 2 questions together, and then we get a final comment and response from Kathy and Lewis. So Louise first, and then Donna.
Thank you, and thanks everybody. It's been a great conference, and it's been nice to see so many old friends virtually and hear new ideas. I wanted to bring up the question of private financing. We've been talking a lot about public sector resources, but domestic resource mobilization also involves private financing. And Africa has the lowest domestic credit to GDP. It's very low, and that's a symptom of the poor banking sector, poor financial development. How can this be improved, and where is the private financing going to come for Build Back Better? Okay,
thank you. And Donna, I think your question is related to some extent. It's about the balance between finance and concessional finance.
Hi, yes, thank you. Yeah, really related actually. So I just wondered whether we think of alternatives, and I think private financing would be one. I mean, alternatives to foreign aid and FDI for developing countries and African countries, because everyone is cutting back on their foreign aid. So how will we build resilience going forward for African countries?
Okay, well, thank you for those 2 questions. In a sense, they're very broad questions, and they touch on many of the issues that have come up already. But let me just turn it to you, Lewis, just to respond on those 2 questions, and maybe any final remark you want to make, because as I said, we need to wrap up in the next few minutes.
Yeah, let me quickly touch on that particular issue of private financing. Let me look at it, first of all, on domestic. As earlier mentioned, we need to increase the efficiency of the financial sector in mobilizing resources and intermediating those resources. I think Louise is very right. Credit to GDP has been quite low. You look across Africa, the intermediation margins are very, very, very high. You look at maturity structure of the deposits. In most cases, they are very short-term deposits which cannot be relied on for long-term lending or strong support to the private sector. We've achieved a lot in terms of financial sector reform. We just need to do more in Africa. Then 2 is the whole issue of foreign financing. In fact, we had achieved a lot. Very many countries are now integrated into the global financial system. We were getting a lot of FDI and medium-term flows. I think there have been some setbacks. I think the financial crisis was one, and recently this shock that we have faced. And I think there is also going to be a recovery in foreign flows to Africa. We need to continue and maintain macroeconomic stability if we want to deepen that integration into the global financial system.
Thank you, Lewis. And let me give the last word to Kathy before I wrap up.
Just to add on private finance, the standard, the common answer is, for external private finance, is strengthen the business environment and look at new instruments, de-risking instruments. We're going to have a paper out later in the year, which is going to look at some of the reasons why external private finance has been low, looking at the perception of low risk-adjusted returns and some of the reasons for that, which relate to both market failures as well as investment risk in the areas of project preparation, exchange rate risk, investors not being able to divest, and really think about what this means for what's needed, which would include obviously these de-risking kinds of instruments, but also thinking about reforms then that have, if you increase the costs, if you bring private finance in and utility prices go up, then how are you able to make sure that the vulnerable who are facing these higher utility costs then, which sometimes have derailed private involvement, then are compensated. So I think there is going to be a lot of scope for private finance, including new sources, foreign institutional philanthropy, crowdfunding, etc. And it will have to be an important part of the picture, in addition to the domestic finance measures that Louis outlined. So I would close on the priorities. I think we've all been discussing, vaccines, continuing to help with health and saving lives and livelihoods, and then these important reforms, which we've talked a lot about, digitalization, domestic revenue mobilization, improved governance, which will help with the private sector, and social safety nets that are all part of development to help with climate change adaptation also, and a resilient recovery. Thanks.
Thank you very much, Kathy. Well, thank you all for joining in this discussion. Thank you to our questioners, and obviously a huge thank you to Kathy and to Louis for contributing and shaping this conversation. I think it's been really insightful and thought-provoking. If your appetite is whetted for macroeconomics, Wednesday is our macroeconomics day on a more conventional CSAE conference schedule. But otherwise, thank you all very much indeed. And thank you, Louis. Thank you, Kathy, and have a good afternoon, everyone. Thank you.